Lesson 40, Money. Hello and welcome to this lesson. Today, we are going to talk about money, personal finance, bank accounts and services, and public finance. This is a very practical topic because we all need to manage our money and understand financial terms. So, let us get started. Personal finance. First, let us look at some advertisements about personal finance to understand the key terms. One bank advertises a good current account, which is the account you use for most everyday business, with the best interest rates, which is the percentage the bank pays you based on how much you have in your account, and a guaranteed overdraft facility, which is permission to have a negative amount of money in your account. You can visit one of their branches. Another advert offers a loan with competitive interest rates, which means rates that are as good as or better than other banks. This is for people who are short of cash and need to raise money for something like a round-the-world trip. There is also an advert for people with too many credit cards. It suggests you consolidate all your cards and debts, which means join them together to make one, into one convenient payment. You can discuss your credit limit, the maximum amount of money you may spend on your card, with them. Finally, there is an advert for a mortgage, which is a loan used usually to buy a house, with low deposits, which is money you pay before buying something to show you really want to buy it, and flexible repayments, which are payments to reduce the amount you owe. Bank accounts and services. Now, let us hear from some people describing their financial situations. One person says, I have a steady income now, that is money coming in regularly, in a way that does not change much, and my outgoings, the money I pay each month, are quite low. I do not have any major expenses, money I spend on things. Another person says, I have just opened a savings account, which is where I put money I do not immediately need, and I transfer money into it regularly, which means I move it from one account to another. A third person explains, I pay all my bills by direct debit. This means money is taken automatically from my account to pay bills, and the bank debits my account for the necessary sums. This means I have a good credit rating, which is a judgment made by a bank about how likely someone is to pay back money they borrow. So I can borrow money if I need to. My account is usually in credit at the beginning of the month, which means it has a positive amount of money, but by the end of the month, it is always overdrawn. It has a negative amount. I hate being in the red, which is an informal way of saying I have a negative amount in my account, and the banks all charge interest on overdrafts. They make me pay a percentage of the amount I owe. I try not to go over my overdraft limit. Another person says, I need to buy a car, but I am not sure how I am going to finance it, which means find the money needed to pay for it. I use online banking most of the time. I only go to the bank occasionally to use the cash machine. Public finance. Finally, let us look at public finance, how the government collects money. The government collects money through taxes. Income tax is collected on wages and salaries, the money people earn from work. Inheritance tax is collected on money people get from people who have died. Customs duty, or excise duty, is paid on goods imported from other countries. Airports usually have duty-free shops where you do not pay this tax. VAT, which stands for value-added tax, is a tax paid on most goods and services. Companies pay corporation tax on their profits, the money they make. So, that is our lesson on money. These terms and expressions will help you talk about personal and public finance, manage your accounts, and understand financial products with confidence.